Imagine this. You deposit $10,000 into your bank account. You think, my money is safe. But here's the real question. What does the bank actually do with your money? Why does the bank pay you 1 to 3% interest but charge 15 to 25% on loans and credit cards? Today we're going to explain the real banking system in the simplest way possible. A bank is not a storage box for money. A bank is a business. When you deposit money, the bank doesn't just lock it in a vault. Instead, the bank lends most of it out. Here's a simple example. You deposit $10,000 into your bank account. The bank keeps about $1,000. The bank lends out $9,000. This system is called fractional reserve banking. It's legal, it's normal, and it's how modern banking works. Now let's talk about profit. The bank tells you, here's 2% interest on your savings. Then the bank tells someone else, here's a loan at 18% interest. That difference? That's the bank's profit. And here's the important part. The bank is making money using your deposited money. Banks don't create wealth by working harder. They create wealth by controlling the flow of money. That's why banks are some of the most powerful institutions in the world. Now let's ask a scary question. What if everyone goes to the bank and asks for their money back at the same time? The bank doesn't actually have it. This is called a bank run. That's why banks can collapse, governments step in. The Federal Reserve acts as a backstop. This is also why the US has FDIC insurance, which protects deposits up to a certain amount. The system works, but only as long as people trust it. Here's the simple truth. A bank is a business. Your money is their fuel. Interest is how they earn. Banks are not evil, but they're not charities either. When you understand how the system works, you can make smarter decisions about saving, borrowing, investing. If you want videos about credit cards, loans, the Federal Reserve, or how money is created,